I had started investing in business school with a classmate. Actually, I went to Harvard with a plan about I was going to learn about investing so I could someday be an investor. And there were no courses on investing at Harvard, but there were courses on finance and accounting and competitive strategy with Michael Porter. And that was the backdrop for my education about investing. And I said, look, I'll open a brokerage account. I've made a little money in my real estate commissions. And this will be another year of, if I lose it all, it's another year of Harvard Business School. If I learn something from it, maybe it's a career. And I kind of fell in love with investing. And it's something you can kind of figure out actually whether you're good at it or not pretty, in a couple of year period of time.
So you started Pershing Square after that period of time or right away?
I started a firm called Gotham Partners with a partner named David Berkowitz, a classmate of mine at business school. We started in September of '92. And yes, we had no experience. What was interesting is that none of the people who knew me in high school, like parents of my friends, had no interest because they thought of me as a kid. But we raised money from mostly people who were themselves good investors. And I think they could see in us, some potential.
A hedge fund manager is someone who can confidently tell the CEO of a company in which their fund holds a significant stake that I have a better idea for running your company than you do. Bill Ackman, for example, is a well-known activist investor. This highlights why it's not so easy for retail investors like you and me to make a lot of money in stocks. Beating hedge fund managers in the stock market is challenging for several reasons, including their expertise, resources, and strategies. However, the most powerful and effective factor is their activist role. Let's go back in time to see how Warren Buffett utilized this approach when he was known for his employing cigar butt strategy, inspired by his mentor Benjamin Graham. This strategy involved buying stocks of undervalued companies, often those in distress, that were trading below their intrinsic value or even below their liquidation value. Buffett would sometimes liquidate these companies if it made financial sense. Here are a couple of notable examples. Sanborn Map Company. Sanborn Map produced maps for fire insurance companies to assess property risk. By the mid-20th century, its primary business had declined due to changes in the insurance industry. In the late 1950s, Buffett recognized that the Sanborn Map stock was significantly undervalued. The company's investments in securities alone were worth far more than its market capitalization. Buffett purchased 35% of the company for his partnership and gained control of the board. He then pushed for liquidation of the company's securities portfolio. This action unlocked the company's intrinsic value, resulting in a substantial return for Buffett and his investors. And the other example is Dempster Mill Manufacturing. Dempster Mill was a struggling manufacturing of farm equipment, including windmills and water systems. In the mid-1950s, Buffett began purchasing shares of Dempster Mill when it was deeply undervalued. He eventually gained a controlling interest in the company. Buffett brought Harry Bottle, a skilled manager, to streamline operations and reduce cost. Once the company was stabilized, Buffett sold its assets, generating significant profits for his partnerships. Buffett wasn't just a passive investor. He frequently got involved in management and corporate discussions. In these early investments, if a business's ongoing operations weren't promising, Buffett did not hesitate to liquidate assets or sell off parts of the company. These early experiences helped him sharpen his skills in valuation and business analysis, laying the foundation for his latest success with Berkshire Hathaway. This illustrates why hedge fund managers often have an upper hand in investing. They combine deep expertise with an active role in shaping the business they invest in.
You specialize in picking stocks. You weren't a macro investor then, where you were a stock picker?
Yes, I would say we were kind of an activist stock picker. We would buy a pretty concentrated portfolio, buy large stakes in companies that we thought were great businesses or had great assets, but were undermanaged.
And when you're an activist, of course, that word has different meanings to different people, but would you call the CEO and say, we own 5%, we'd like to be on the board, we'd like to tell you how to run your company? Did you do that? And was that intimidating to do that?
It's not exactly what we said, because again, we were young and inexperienced, but it was more that we'd find a company. One of the early investments was Wendy's, the hamburger chain, and Wendy's owned 100% of a chain called Tim Hortons in Canada. And Tim Hortons was a very profitable, successful, pure franchise of coffee and donut chain, principally in Canada. And you could fairly clearly see that business was worth about $5 billion at least. It had about $450 million of operating income. It's probably worth meaningfully more than that. But you could buy all of Wendy's for $5 billion. So literally the market was ascribing zero value to the Wendy's franchise. And our advice to the CEO is, well, just spin off Tim Hortons. And then focus on fixing Wendy's, but you can create enormous value in just separating the two companies. So it was a bit like investment banking where we didn't charge a fee. And actually back then, because we couldn't get a return phone call, because we were a tiny little fund circa 2004, we hired Blackstone, which had an investment bank at the time, and we hired them to say, put together a fairness opinion, if you will, of what Wendy's would be worth if they spun off Tim Hortons. And then we wrote a letter to the board. We attached the Blackstone valuation, which was nearly double where the stock was trading. And then 6 weeks later, magically, they spun off Tim Hortons.
Okay, so you did that with other companies, and being an activist, was it consistent with your personality to do this? Because you got to be a tough guy to call up CEOs and say, hey, look, I got a better idea about how to run your company than you do.
It was consistent with my personality. I think I've always been some form of an activist, yes.
And today your focus is on the kind of activist investing, or you've stopped that?
So, when no one knows who you are, and you're trying to affect change in a company, you have to sort of be an activist. You have to use the media, the public platform to, in some cases, shame a company into doing the right thing. 20 years later, having had a meaningful number of successful engagements with companies, we don't really have to do that anymore. And so a lot of the stuff we've done recently has been either buying into a company that already has great leadership, and we're happy to share ideas. In some cases, there needs to be a change in leadership, but we're able to get things done without, sort of what you might call activism, more like engaged owners of businesses.
You've done 3 extremely successful macro bets, one during the period of the time of the housing crisis, 07, 08, and that one was extremely successful. You did one again during the COVID period of time,
yes,
which was, I think, maybe your best investment ever. You made a 94 times your money investment.
Almost 100 times, actually.
100 times.
Yeah, yes. We bet that the credit spreads would widen because we'd have to shut down the global economy. And that's basically what happened. Derivative.
So
yeah.
Did people say, do you have any more deals like that when you did that one?
Yes.
And those are hard to find.
The 3 black swan events in the last 20 years, we've been able to make big profitable bets on. But these kind of black swan type things hopefully occur only every 7 years, let's say.
Well, interest rates went up, and they started going up. You made another macro bet that
yes.
turned out to be pretty successful as well.
Yes.
So do you have any other macro bets you can mention now, or nothing you can mention?
We have another one on as we speak. Actually, we're betting that the Federal Reserve is going to have to cut rates more quickly than people expect. That's the current macro bet that we have on.